G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're taking a look at Bitcoin and specifically this 50-week moving average. And this figure here of 33,700 could be the most critical number that we need to look for over the next week. And if we break below that number, it could be confirmation of a bear market that may take us well into 2022. Okay, so if you're up for some family feel-good entertainment, please stick around and I'll explain what's going on here. So first of all, let's back up. Now, if you saw my video yesterday, we looked at the 50-week moving average, which is this blue shaded line here. And we looked at it comparing the 2013 cycle to the 2017 to the 2021. And you notice that we followed a very similar pattern on all three occasions. So in the little green section here, you can see that we bounced off the 50-week moving average on all three occasions. And then on all three occasions, we bounced up with some force, with some big green candles. Look at these green candles. Until we got to this point here where we turned around in the red circle. And that happened in 2013, it happened in 2017, and it happened again, well, it's happening as we speak, in 2021. And then in 2013 and 2017, we then crashed back down with force below the 50-week moving average. You can see that here in the purple sections. And on both occasions, we never got out. We never got above the 50-week moving average until we ended up bottoming out. And if we do the same thing again and follow that same pattern again in 2021, it could mean the same thing happens again. Now, I'll show you this again in a log format so you can see further proof. So here we are in 2013. Once we crashed below the 50-week moving average, you can see we never got above it until we bottomed out. And then the next bull run started. And then in 2017, once we crashed below it, and again, we bounced off it on both of those occasions before that, which we've done again, we never got above it until we bottomed out. And then you could even argue in 2019, a similar thing when we had the 2020 March COVID crash. And then we got above it again and started the next bull run. So we are following the same patterns so far that we've followed on every occasion. And even the stock RSIs look almost identical on each occasion with it goes down, stays across the bottom, and then starts giving us some bullish momentum for this bounce, which it's done on every occasion. But then we turn around and we crash through it. So we're following these same patterns over and over. Okay, so now let's have a closer look, and this is a daily chart. Let's have a closer look at 2021. So you can see again, what we did is we bounced off the 50-week moving average here with force, just like we did in 2013 and 2017. And now we've turned around, just like we did in those other occasions, and we're coming back down. So what I've done here is I've extrapolated that line slightly out. It's 50 weeks worth of data, so you can, with some level of certainty, identify where that line will be over the next month or so. You probably can't go too far ahead beyond that point, but this will be fairly accurate to where that point will be up until about October or so. So the question is, if we fall below here, will we recover? And on every other occasion, the answer has been no. We have come back, and in 2017, we ended up kissing the 50-week moving average like we did here. And in 2013, we didn't even get that far. So I'll just show you that again. So 2017, we came back to kiss it, and then we dropped below. 2013, we never did. We didn't even get anywhere near it. So it is extremely dangerous if we drop below the 50-week moving average and then don't break above it again, which we've never done in the previous bull runs. So that was the first message that I wanted to provide with this video, and I've identified if we follow this trajectory, that's the figure there, 33,700. If we break that number and follow through, if we just hover about there, it's okay. But if we actually break through it with force, like we've done in other bull runs, so that's something to look out for as well, and that'll provide further confluence that we are following the same pattern. If we break through that with force and end up down at these levels, somewhere in that around 28K, 28K, 27.5K mark, or even worse, maybe down here somewhere in the 24s. We'll have to see how that plays out. If we come down to these levels and then fail to break above it again, then there's a good chance that we are going to spend the next 6, 9, 12 months in a bear market until we bottom out sometime in 2022. So I hope you enjoyed that family feel-good content. This channel is not about trying to just create excitement and play on people's greed. This is about looking back through the data and seeing what happened on previous occasions and see if we can see regular patterns that are playing out. And that gives us confidence, and it also puts the odds in our favor about what happens next. So it is entirely possible that this is just a minor pullback and then we bounce off and go to all-time highs. There's nothing against the laws of physics to say that can't happen. But the probability of that happening versus the probability of following the same pattern that we've followed in every other bull run is quite low. So you really want to work with the odds on your side. So on that note, I hope you enjoyed the content. I hope you're enjoying this. I've been getting some really good comments, some personal messages that have been very touching. So thank you to all those people that have been reaching out. And also anyone that has any feedback, I'm learning as well. So if anyone has any ideas or feedback or picks up anything I'm saying and thinks there's another way of doing it, yeah, please let me know. I'd love to hear that feedback. So until next time, I'm Tim, and cheers.